Hi, this is Matt Demetrician of Telemus Capital with the week in review for the week ending July 9th of 2021. Stocks seesawed up and down during the week, finishing to the positive as both the S&P 500 and NASDAQ Composite were up 0.4%. The Dow Jones Industrial Average rose 0.2%, while the Russell 2000 index fell for the second straight week, down 1.1%. The story of the week was the rally in the bond market as interest rates continued to push lower. Intra-week, the yield on the 10-year Treasury had fallen nearly 20 basis points or 0.2% before finishing down just 5 basis points. This resulted in a strong week for bonds as the Bloomberg Barclays U.S. Aggregate index was up 0.3%. Bonds yield fell due to a confluence of factors. First, the supply of Treasury bonds remains tight given the lack of recent issuance. Second, the continued pace of purchases by the Fed is restricting the supply of Treasuries available in the secondary market. Lastly, fears around the surge of additional COVID 19 cases due to the Delta variant have some questioning whether the Fed may have to hold off on its normalization path. Economic data points released during the week remained positive but did indicate a slowing in the rate of improvement. The ISM Services PMI reading stood out in this regard, as the June reading of 60.1 was in and of itself quite strong, but it did decelerate from May's reading of 64. The JOLTS job statistics continued to show a high number of new job openings. However, the number fell slightly from the prior month. Stocks reacted to the economic news with stable growth stocks outpacing the returns of more economically sensitive value stocks. Of late, growth stocks have shown a greater correlation to the Treasury bond market, as growth stocks have tended to outperform their value counterparts when interest rates have fallen. For the week, energy was the worst performing sector, declining over 3%. Financials also fell as lower yields were viewed negatively for the sector's ability to grow interest income. On the other side, real estate was the top performing sector within the S&P 500, followed by consumer discretionary and utilities. Market breadth, or the number of stocks trading above their 50-day moving average, remains low. In fact, market breadth is at its lowest level since 1999. This is noteworthy given that the S&P 500 and NASDAQ concluded the week at record highs. In other markets, commodities continued to receive a bid as the Bloomberg Commodity Index hit its highest level since 2015. Oil prices climbed earlier in the week after talks among OPEC partners broke down. Crude prices then reset the remainder of the week and ended down 0.8% to just below $75 a barrel. Earlier in the week, the dollar climbed and hit a 3-month high, but ended the week essentially flat. Gold finished the week 1.5% higher. As we look ahead to the coming week, we'll start to be beginning to get some early second quarter earnings reports out of some companies in the S&P 500. That concludes the week in review for the week ending July 9th of 2021. Thanks, stay safe, and enjoy your week.